If it is done, just yeah, okay. So shall we start? Shall we start, Tanya?
Yes,
Hello.
ma'am. Yes, ma'am. Go ahead.
Yeah, yeah. Okay. So see, the lesson which we are going to start is identifying and preventing fraud. Okay. So first of all, we have to know what's the definition of fraud. Okay. Now, what is fraud? Fraud is intentional misrepresentation. What do you mean by misrepresentation? You are telling someone something which is false. Okay, and definitely you know about that particular thing. That whatever information you are conveying, that's a false information. Okay, so what can be termed as fraud? It's a false representation of fact made with the knowledge of its falsity. You are very well aware about the scenario that it's a false news, or it's a false thing, or it's a false fact, or without belief in its truth, or recklessly careless whether it be true or false, or you don't care whether it is true or false. You are just what to say, you are just conveying that particular message to someone else. Okay. So in corporate context, fraud can be falling into two categories: removal of funds or assets. So, like basically, when we talk about an organization, in an organization, what can be termed, how fraud can be how fraud can be committed. So there are only two ways: removal of funds or assets. Either you are misappropriating funds, which are actually the assets, or the which belong to the particular company, or second thing is misrepresentation. Okay, so first of all, we'll discuss in detail about removal of funds and asset. So removal of funds or assets from business includes the following. What are those? First is theft of cash, such as petty cash. Like when we talk about an organization, definitely we know now that to some extent every organization keeps some loose cash. Okay, why they have to keep that loose cash? So that they can like pay off that petty expenses which are incurred by the company. Okay, so theft of cash, such as petty cash or inventory. So definitely that's loose cash that is open, and the cashier will be able to take this, or take the responsibility of that. And definitely when he has that authority, sometimes if he is a dishonest person, he can misrepresent or he can misuse that particular fund also. Okay, so that's the first thing. Second is payroll fraud. So how can we say about payroll fraud? Claiming overtime for hours which they did not really work. Like definitely working hours are from 9 to 6. Okay, but the in the company someone is showing, or the suppose the manager is showing that some 2 3 particular employees, they have worked overtime, even though they have not really worked overtime. Okay, why? Because we know now for overtime, actually the payment is more than what is for the normal time period. So in this way, they can commit fraud. Clear? Now next, third is teaming and lading. So teaming and lading is also one way. Like I'll give you one example. There are some 2 3 customers of a particular company. Okay, like we can say customer A, B, C, and D. So all have purchased goods from the company on credit. So definitely when some goods are purchased from the company on credit, we will get the payment after a certain period. Okay. So suppose the manager has received payment from A. Okay. Now that payment he will keep, he will retain with himself. And when he is receiving payment from B, he will show it as he has received payment from A. Okay. Now, once that is done, when he is receiving payment from C, he will show it as payment received from B. Okay, so that this is how it goes, and this is termed as teaming and lading. In this way, his fraud will not be detected very easily. So, is it clear, teaming and lading? Hello, Tanya, are you able to hear?
Yes, ma'am.
And this topic is also clear, this term is also clear, not teaming and leading.
Yes, ma'am.
Now, fourth thing is dispatching inventory to fictitious customers and then writing off the debt or colluding with customers. So sometimes inventory is shown as like it is purchased from someone. It has been sold to someone as fictitious customer. Fictitious customers means fake customer. Actually, they are not in existence. Okay, and then definitely when they are fictitious customers, we will not receive any kind of amount from those particular persons. Why? Because they are not in existence. So later on, we show it as bad debt. Okay. Now, next is bogus supply of goods or services or paying for goods not received. So in same way, there can be bogus supply of goods also. Okay. Or services or paying for goods not received. Then misuse of assets such as raiding pension funds or disposal of assets to employees for a value significantly below market price. And definitely in the company, there are certain assets also, and those assets are being misused by the employees of the company. Okay. Like pension funds, okay, or disposal of assets to employees. We are showing that some assets has been disposed of to the employees, which is very which is of a value less than market price. So these are certain methods by which this there is misappropriation of funds or inventory. Now, second thing is misrepresentation. So now misrepresentation can be in two ways: intentional, unintentional. So first of all, misrepresentation means we are understanding something in a wrong way. Okay. So intentional misrepresentation of financial position of business is often caused by a desire to overstate or understate profits. Intentional means we are intentionally doing it. We know the fact that it is wrong, it is not correct, even though we are doing it. Okay. So why we are doing it? Because we have a desire to overstate profit or understate. Overstate means we want to inflate the profit. And when does a company take such kind of steps? When the company wants to show the profits of that particular organization at a very as a good amount of profit. Or sometimes some company they want to they might show it as understated profit. So this could include overvaluation of inventory. So overvaluation of inventory, how can we show like see, inventory is valued worth 10,000, but in our book we are showing it at 15,000. So that is overvaluation. Okay. Then irrecoverable debt policy may not be enforced, leading to inflated trade receivables. Sometimes, like some trade receivable has been inflated. Actually, the receivables are say 50,000 only. Okay, but we are showing it as 70,000. And so definitely this 20,000 difference will be shown as irrecoverable debt. Okay, and next is fictitious sales. Fictitious sales means again fake sales we are showing, actually which has not occurred or not happened. Manipulation of year-end events via credit notes, invoices, and goods. Sometimes, like basically, if you are trying to commit fraud, that will be very near to the year end. Okay, so like in year end only, we come to know about the actual profit of the company. No? So in that scenario, we can manipulate the those profit. Okay, so that can be via credit notes. Now, when a credit note is issued, a credit note is issued when we receive some overpayments from customers. Okay. So by this way, we can show that we have issued a credit note if we want to misrepresent the funds of the company. Understating expenses by failing to record certain amounts. And sometimes definitely like some expenses we have incurred, but we don't record them. So definitely our expenses will be understated. Manipulation of depreciation figures via inaccurate lifetimes or inappropriate policies. And then depreciation figures can sometimes be manipulated, like if an asset has a lifetime of say 10 years, but we are showing it as an asset of lifetime of 15 years, definitely it will have an effect upon the value of depreciation. Why? Because we know now what's the formula for depreciation. It is cost minus residual value by useful life. So if actually useful life is 10 years only and we are showing it as 15 years, the amount of depreciation which we should show will be more than what actually we are showing. Okay. So this is manipulation of depreciation figure. And that can be done by showing inaccurate lifetime or inappropriate policies which has been formed by the company and which is followed by the company. Okay. Clear? Now, next is potential for fraud. So, potential for fraud means like definitely see for committing fraud, there are certain prerequisite. Okay, in that scenario, only a person can commit fraud. Okay, so first and foremost thing is that person should be a dishonest person. So, honesty is a subjective quality interpreted according to various ethical, cultural, and legal norms. That said, we may define dishonesty as a predisposition to act contrary to accepted ethical, social, and legal norms for fair and honest dealing. So, like just opposite of honesty is dishonesty. In honesty, we follow like some ethical, social norms, okay, and we abide by those social, ethical, and legal norms. If we don't abide by those social, ethical, or legal norms, definitely we are being dishonest. So this tendency may arise from personality factors. Now, personality factor, like when can be a person dishonest? When he has certain like a certain aim to achieve much in a very small time period. Okay, so a high need for achievement, status or security. In today's world, we know now like everyone is like being a part of race. Okay, and everyone wants to go ahead of the other person. Okay, and in that scenario, they find it they find this dishonesty only as the one and only means by which they can achieve something big in a very small period of time. Okay. Then a competitive desire to gain advantage over others, low respect for authority. So if this personality trait a particular person has in his or her behavior, in his or her character, definitely he will be a dishonest person. Now, second factor is cultural factors like national or familial values, which may be more flexible or anti-authority than the low and proactive prevailing in the organization. Like cultural values about ethics of business, bribes. Definitely, how in a business, how people they give bribe, they lure the other person with expensive gifts. Okay, and definitely, if you are receiving and if you are accepting those particular gifts, you will be not in a situation to say a no to that particular person. Okay, so that is about cultural factors. Now second thing which motivate a person to commit fraud is motivation. Now in addition to a general predisposition or willingness to act dishonestly, dishonesty, should the opportunity arise, the individual needs a specific motivation to do so. So first of all, in your character, dishonesty should be there. Now, dishonesty followed by motivation. That is, you are being motivated to do that particular thing. So broadly, this involves a calculation of whether a given action is worthwhile. Individuals weigh up the potential rewards of an action. This considered the satisfaction of some need or the fulfillment of some goal. Now, versus the potential sanctions. By contrast, this considered the deprivation required to carry it through. So, one is which is encouraging you to commit fraud, another is which is discouraging you to commit fraud. So, individuals' goal or motive for fraudulent behavior may be financial needs or wants. Like sometimes we see now out of family pressure, out of financial pressures, people they become dishonest and they try to commit fraud. Okay, so first is financial needs or wants. Second, a desire to exercise negative power over those in authority. Okay, so definitely like whoever are in authority, we are having some negative mindset for that particular person. A desire to avoid punishment, and sometimes if we want to cover up our mistake, we try to be dishonest. Okay, so that is motivation. Third, now if even though you are like, first of all, we have been dishonest. Second, we are motivated, or we are being encouraged to do commit fraud. Third, you should get the opportunity to commit fraud. So even if a person is willing to act dishonesty and has motive, like first two purposes are solved. Okay. But third thing should be there, that is you should get the opportunity to commit the fraud. Okay. So a loophole in the law or control system that allows fraudulent activity to go undetected. An opportunity will get only when we know about a particular thing in minute detail. Okay. So when we know certain things in detail, we can find out the loopholes very easily. And loopholes means we will be able to commit fraud, and the people, someone else will not be able to detect that, or even. Okay. So that remains undetected. Second, makes the risk of detection acceptable. And sometimes the people, that particular person is so commit, what to say, he is ready to commit fraud, that he is ready to take that particular risk, even that even if something is detected, he is ready to accept the pros and cons of that, or he is ready to face that particular situation. Now, an individual will have a high incentive to commit fraud if they are predisposed to dishonesty and the rewards for the particular fraud are high, and there is an opportunity to commit. So all three things are required in order to commit a fraud. First of all, you should be a dishonest person. Second, you will be motivated to do that. And third, you should get the opportunity to commit that particular thing. And in opportunity, again, two things are there. Sometimes by loopholes, something remains undetected, and even if it is detected, you are ready to face the consequences. Okay, so that is about opportunity. Now, other fraud risk assessment factors. So signs of high fraud risk include indications of general factors such as lack of integrity. So integrity is also like, what is integrity? You are being unbiased. Okay. You are not taking side of any particular thing. You are not being biased about a particular thing. So if that is lacking, definitely you are more inclined towards committing fraud. Okay. Second thing, excessive pressures. So in today's world, we know everyone is having excessive pressure because, like in inflation, the purchasing power of every customer is decreasing. So definitely they want that they should earn very huge amount of income. Okay, so that excessive pressure also encourage them or motivate them to commit fraud. Then poor control systems. So even if control systems are there in the company, but they are not like properly managed, they are for namesake only. So like people know, or the employees who are working there, they know that the system is prevalent in the company, that is mentioned in the policy, but actually no such kind of system is followed. Okay. Then unusual transaction. Unusual transaction means a transaction of a very high amount, which has uh, basically which the company is not incurring. Okay, suddenly a very huge amount of transaction is incurred by the company. So this is something which is unusual. Then lack of audit evidence, and sometimes like audit, we know now audit is re-examination of books of accounts which are prepared by the accountant of the company. Okay, why re-examination is required? So that we can be full proof that whatever the employees of the company are preparing an account, they are giving true and fair information. Okay, but in audit also, audit is also based upon evidence and fact, and we don't have any evidence for that particular thing. A number of factors tend to crop up time and again as issues that might indicate potential fraud. Attention should be drawn to them if any of these factors come to light when assessing external and internal risk. Now, so we will check the external factors and internal factors. So first I'll discuss about external factors. External factors is like the external environment. And when we talk about external environment, first of all, we'll talk about marketplace. So marketplace as a whole, like trend to delayer may reduce the degree of supervision. What is delayering? Like in a company, we know that there is hierarchy. What do you mean by hierarchy? At the top, you find CEO, CFO of the company. Then very next to him will be the general manager. Then very next to him will be the senior manager, then manager, then deputy manager, then assistant manager, and so on. Now, in between, suppose if we are removing the senior managers, that means we are delayering, okay, reducing the layers, okay. So when the senior manager is removed, definitely the degree of supervision will also decrease. So that will motivate the employees to commit fraud because they are not properly supervised, okay. Then the industry in which the firm operates, like the building industry, may be particularly prone to the risk of theft of raw material. We know that if we are into construction field, there will be a very huge amount of risk of theft of raw materials. Okay. Travel industry may face risk due to extensive use of agents and intermediaries. And the retail industry must be vigilant to the abuse of credit cards. So these are all external factors. Third, in a competitive industry, fraud may be tempting way of keeping up with the rest of the market. So in competitive industry, fraud may be tempting way of keeping up with the rest of the market. That means like competing, always being ahead of your rivals or of your competitors. Okay, so definitely like by hook or by crook, I want to be the king of the market. So if that mindset you have, definitely you will be like more prone towards committing fraud. So these are all external factors. Now we'll check the internal factors. So in internal factors, having considered the big picture, the next step is to apply the same logic on company level. Company level means internal, inside the company. So focus is like be alert to circumstances that might increase the risk profile of a company. First, change operating environment. So we know now change is constant. Nothing is constant. Definitely everything will change. So changed operating environment will again give that the employees of the company a particular chance to commit fraud. New personnel means new employees are employed, new and they can't be easily like what to say, we can't easily have faith upon those particular employees. New or upgraded management information system, that is something which is related to IT. Okay, so it's a new system, it's an upgraded system, and in that system itself, right from the beginning, if some changes has been made uh, with the motive of committing fraud, that will help that particular employee to commit fraud for a long period of time. New overseas operation, like this particular company has a branch in some overseas country even, okay, and like they are not disclosing each and every fact in detail, or they are not disclosing true fact for that particular overseas operation. So rapid growth, what has happened to the company, that the company is rapidly growing. Okay, the new technology which is followed by the company, new products which has been like initiated by the company has started with a range of products. Corporate restructuring means like the some changes are being made in the share capital of the company, or the per share value is being changed. Okay, then the prevalence of cash sales. In cash sales, we know now there is no proof that how much sales has been incurred, because if there is some kind of like some people they are misappropriating cash, they will not show the correct particular sales figure. Okay, now types of risk to be considered include business risk, personal, computer, organizational, and strategic. So what is business risk? Like profit deviating significantly from industry norm. Like we will take the example of IT sector. So sometimes we see now the IT sector is blooming, sometimes the IT sector is in dark. Okay, so there are some 2 3 companies in IT sector, so each company is like incurring loss, but one among those companies like gaining a huge amount of profit. So what does it denote? It denotes that something, the profits are deviating from the industry norm. The whole industry is in blue, the whole industry is in dark, but one particular company is blooming. So definitely some kind of like we can easily detect that some kind of misstatement they have incurred or they have made. Then comes personal risk including the behavior and actions of staff. So personal means the people who are working in the company. So to some extent their behavior also like their behavior or their action also like speaks that they are trying to commit some certain kind of fraud. Then comes computer risk, such as the ease with which a hacker can gain access to an organization's system. So IT system, it's a boon also, it's a ban also. So if used properly, it's a boon, but there are some certain side effects even. Okay. Organizational risks such as extensive authority given to dominant managers, unclear structures of responsibilities, or lack of supervision on remote location. Like if suppose the company has 3-4 branches. So in that particular way, like one branch is totally ignored or like not properly supervised. Then comes strategic risk, like lack of business strategy, or they have not made proper policies. Okay. And great emphasis is being placed on reward by results. Okay, so these are the types of business risk. Now, next is implications of fraud for the organization. So, fraud often leads to removal of funds or assets from a business, which has the following impacts. Now, we'll show how it is going to impact or what impact it makes. Immediate financial implications of reduction. So, definitely in a company, when fraud is committed, that will directly have an effect upon the profits of the company or the cash of the company. Long-term effects on company performance, and definitely it will have a long-term effect, because like now the employees will be used to committing fraud, and that can lead to even the collapse of the company. Intentional misrepresentation of businesses financial position or performance, which can mask its true condition and affect future strategy of the company. Okay. Now, if results are overstated, so we'll see what is the effect of overstated result. Like we are showing inflated profit. We are showing profits more than what is actually incurred. Okay. Excessive distribution of profits, which can compromise financial stability. So why we are showing inflated profit? Because we don't want the shareholders to have an idea that the company is into losses, or companies in a dark scenario. Then, so that's the reason we are distributing. Definitely, we know our profits are being distributed as dividend among the shareholders. So we are distributing excessive profits among the shareholders, and that will have an effect upon financial stability of the company. That too negatively. Retained profits will be lower than believed. So definitely, like this, a huge amount of profit being distributed is distributed from where? From the retained earnings. So slowly and gradually, the retained earnings will decrease. Incorrect decisions will be made based on incorrect data. And when incorrect data are provided, definitely the decisions which are based upon those data will also be incorrect. Adverse impact on stakeholders, and that will have a very big effect or impact upon the stakeholders, be it the investors, the suppliers, the customers of the company. Okay. Customers of the company. Okay. Now, if results are understated, the impact is demonstrated by negative publicity and an adverse impact on reputation among investors. Now, if actually you are earning, say, a huge amount of profit, but you are understating the profit with the motive that you don't want to share the profit among the shareholders, definitely shareholders will have a mindset that the company is not stable, and in future it might collapse also. So they will have negative publicity against the company, or they will have negative image against the company. And then legal consequences if fraud is uncovered by the authorities. So that's about the legal consequences which might be faced by the company if the legal authorities, they are able to detect that particular fraud. Like we can take an example of like income tax. Income tax is to be paid when your income level cross after a certain level. Okay, after the slab which is given. Okay, so like, and if you are not disclosing proper income, and that comes into picture that you are earning, like we'll take example, you're earning say 25 lakhs and you are showing that you have an income of 5 lakhs yearly. Okay, so definitely if that is uncovered by the authority, they will take some legal action against you. Okay, so that's about adverse effect. So Tanya will do one thing, we'll stop here for today. From the next topic, like tomorrow, sir or me, anyone will continue. Okay.
Okay, ma'am.
So till this topic, everything is clear?
Yes, ma'am.
Okay, fine, Tanya. You can just go through the video and recording once again if you have doubt in anything. Else we can discuss it in tomorrow's class also. Okay. How many total topics are there in this lesson?
More 2 hours left, ma'am.
Oh, two, na? Okay, we can complete it tomorrow.
Okay,
Okay, Tanya. Thank you.
okay, ma'am.